Good morning, everyone, to the Trading Capital Markets channel. We review, we mainly trade the Nasdaq. All right, so let's see what we got going on over here. All right, so before yesterday, we had this premium wick on the daily. Back on the daily like that, I could show you guys a premium wick on the daily that we were using as levels. Okay, so it's remaining below the 50%, closing below it. Before that, Trump comment, Trump comment or tweet, where they're going to pause 90 days for the countries that are not retaliating. All right. So on the weekly, we took our first target. If you go back to last week's first pre-markets analysis, we said that these are the first targets that we're going to get, or we were starting off the week here and we thought that we are going to go here. So we took those targets. Then Trump over here gave that tweet, boom, market up 10.2% in the same day. Nuts. I've never seen this in my trading career, even during COVID. Like, it was nuts. Look at this. Look at this. This is COVID. I know it's relative in price, but still, this is crazy. That was crazy. Okay, in one day, one candle, bang. So that's where we are. Let's remove this, perfect, and remove this because we no longer need it. So now we're trading within this candle's range. Okay, let's go one step lower. Actually, you know what? Let's pull a little fib from the top to the bottom, and another fib. Top to the bottom of that candle's range. Let's go down one time frame to the daily. Okay. Extend lines right. Extend lines right. Okay. There you go. Okay, so we stopped at the 75% retracement of the previous week's candle range. Over here, body stopped right on it. Reversed. This is a 50. That's the 100. So from here to here. All right. What do we got? What do we got? What do we got? So this was the order block. This the daily order block before that big downturn. Right. This is all preceding Trump's comment. So it's crazy. There you go. That's the order block. Stopped at the consequent encroachment and returned down. So here is the volume imbalance. It was painted a bit more blue, like that we could see it. Maybe what 30, 36, 36, 36 seems good. So you have volume imbalance, a fair value gap that became a inversion. So let's color these differently. Inversion, inversion, and might possibly use these as support. So this goes from there to here, to this one. That's on the daily. From here to there, and from there to here, as inversions. That's good. Let's go down on the 4 hour. Within this inversion, we might even use this one as an inversion. Boom, right here. One within the other. Okay. And at the same time, it might be like, what, the 50 consequent encroachment of this big candle on the 4 hour. take out this buy side. 5-minute fair value gap here. We don't need none of this anymore. Here, let's just do a control. So if you guys didn't know, you do control and drag your mouse around the section, and it'll delete everything that's in there. All the like not indicators, but the drawings. That's good. Let's take this, do that over here too. Perfect. Like that, we know what we're working with. So we hit this last order block. That's so impressive. Like you go down to like you go down a time frame and it gets even more precise and even more precise and even more precise. And it's just mind blowing. Like that was the, let's say, daily. All right, let's go back one, and that's the daily order block. Let's delete this. So that's the daily order block. Gone on a 4-hour. You see where it stopped? Go down on the 4-hour. Even more mind blowing. Let's take off the daily and put the 4-hour. Look at the precision. Look at that. If we put it to the body stopped right on. Anyways, body stopped on the other body. This is like crazy. There's no way this is not algorithmic. I'm just saying. There's no way. Anyways, I believe it to be algorithmic. So we have that, and it stopped on the 75% retracement of the previous week's range. And on this, and on that, like it's just like there's no way. It's not people. They just said, "Oh, yeah, it has to stop here." So we have that order block on the 4-hour, drop down to the 1-hour. Drop down to the 1-hour. This is so nice. Okay, so this is a breaker. Okay, this is a bearish breaker. Look at this. Look at this. So that's what we use as support to get a reversal, right? A reversal when you get a retracement back into this bearish breaker. Look where it stopped. Right on that bearish breaker. It's nuts. It's the last down candle before new highs. That's crazy. Anyways, so there's a lot of things that you could point to make the trade, to make this trade happen. That's short, right? Given market conditions, I think that would have been the safest trade to take. But I don't trade at night. That said, we will have to find. It's kind of tough in these market conditions because this is huge ranges, huge candle ranges, and I mean, sometimes it's just not worth trading. It's just not worth trading these at all, like at all. It's not worth it. It's very risky. Not risky, it's just that you have to reduce your risk because there's a lot of price to cover. Let's go down to the 15-minute. Is it going to sell off the whole way down? Probably. People are going to come back to their senses, not because one tweet is going to change the final outcome of the tariffs. Tariffs, I think he's playing a long-term game, Trump. Longer term than anybody thinks. I know he has 4 years for the term, but this seems like a long play. So for now, I think people are going to be selling. Well, people, institutions that actually know how much time it's going to take to realize this plan. And it's probably going to, how do you say, level out at around 15,000 and come back up. But we'll see. Okay, so there's those. Let's bring these over here. These over here. Like that. We have them to the left and fair value up to the right. Because this gets annoying when there's too many things on your chart, you know? Now we have a 15-minute fair value gap over here. Boom. We'll put in FVG. Perfect. The center is of that fair value gap is right on that 25% mark of the previous week's range. So that's interesting. That is interesting. And it's at the bottom of this inversion. Yeah, we'll see. I mean, what do we think it's going to track to first? I think it's going to track to this first. So I'll be looking for shorts. Shorts over longs for today. Because I think we're going to tap into this first before going a bit higher. But I can be surprised at the open. So we'll see. We might even take these, right? No, that's 800 points. Let's see if we have market news today. Anything today? Market news. We had continuing jobless claims at 8:30. So a majority of the news was at 8:30. CPI at 8:30. 8:30. CPI down. And CPI month over month really down. So all of the CPI, core CPI and CPI down. Down by a lot. Damn. We might have a push over here and then a little pick back up. Okay, so CPI is the consumer price index. So a higher reading should be taken positive, so bullish for the USD, while a lower than expected reading should be taken negative for the USD. It measures changes in purchasing trends and inflation. Price changes from the consumer's perspective. I mean, so that's good for the consumer. Lower goods and services. So yeah, we'll be eyeing the shorts. But mainly we will be looking at the price action to see what exactly the market is trying to tell us. Because we're not going to stick to a narrative in our minds. Might just fucking skyrocket straight up from here. So I hope you guys enjoyed me showing you the key areas in the trading day and why it reverses here and to what precision it reverses, which is just mind-boggling. I love it. It's so satisfying. Yeah, hope you liked the pre-market analysis of the Nasdaq. Like and subscribe. Put that notification on, like that you guys get the pre-market analysis of Nasdaq every day before 9 a.m. So see you at the live at 9:30. Ciao, guys.